Well, happy Monday. Here's a look at the latest real estate data in the Austin metro area. And before we get to sales and interest rates and all that, we're actually going to start with restaurants. Well, the Michelin Guide, you might know this guide for talking about hoity toity restaurants in New York and LA, Chicago. Well, Michelin decided for the first time to come to the Lone Star State this year, and they have rated restaurants in Dallas and Houston and San Antonio and Austin. Thought I'd share. These are the top seven that they picked in the Austin area. So if we come down here, these are the ones right here that got Michelin stars. We've got Barley Swine, Craft Omakase, Hestia, Olame, Interstellar Barbecue, LA Barbecue, and Leroy and Lewis Barbecue. So three of the seven are barbecue restaurants. I'm a little curious about that. It doesn't seem as sit down, kind of hoity toity and fancy to me, but they are delicious. And of course, Bib Gourmand, whatever that means. Here's another list of well known restaurants in the market. And of course, even the recommended list. I'm curious what you think. I'm going to drop this link in the comments below. If you've been to any of these restaurants, let me know what you think. And of course, if you're in Austin, let's go eat some good food. But, anyways, thought that was interesting. Austin, among many, is finally making it on the fancy list. So check that out. All right, let's talk real estate. So this is looking at October sold data. Want to pop up this chart right here. I know it's a little small, but the red line is 2024. So this is number of sales, not price. So if we look at number of sales, obviously down, but we're pretty in line now with 2022, 2023, and 2024 for this time of year. We're within just a few sales there. The pandemic is the ones that were way higher. So that's just a look at volume. In terms of units sold, like I said, we're down just 1.67%. The average sold price was up just a little bit over October last year, 1.3%. Days on market, higher. So we're still seeing days on market get longer. We haven't quite bottomed out there. And median sales price was down less than 1%. And again, that's just looking at October over October data. This data right here is from the week of November 3rd through 9th. So just a few weeks ago, listings were down almost 5%. Sold listings also down. So again, fewer sellers, less volume. Months of inventory is higher, which tells you pace of sales, it's taking longer. There aren't as many buyers out there. Median sales price sitting around 430,000, and we have about 13,000 homes on the market. About 10% of them had a price reduction in the past week and during that week. So year-to-date sold data. This little chart right here is talking about if you look at January through October of 2023 and that same 10 months this year in 2024, total sales were within about 2%. We're down. So again, fewer buyers, but we're down not too bad, about 2% off last year. Average sales price, again, down less than 2%. Days on market up a week and a half. So there's that longer time on market for sellers. And median sales price, we're down about 3%. We're sitting about 434,000. And again, sitting at 13,000 homes for sale on the market. If we look at the last 3 years, 2022, 2023, 2024, right here, we're sitting between 11,000 to 13,000 homes for sale. The last time we had that many was 2010. When we had the last housing recession. Now, granted, the metro area was much smaller back then by probably 600, 700,000 people. So equivalent wise, we're probably on par with that. We also have a lot of new construction compared to what we did in 2010. But anyways, a lot of homes for sale, still taking a little bit longer. All right, we're going to switch over. This is rental data. So this again is looking at October. And I may have shared these before, but I'd share it again. So we're starting to see the seasonality of the rental market start to kick in, meaning there's less activity. Almost always October through about early January is kind of the slowest window for rentals. So the top box here is single family rentals. This bottom section is duplexes. So if we compare it year over year in October, leasing is down about 5% on single families. Listings pretty on par. We're down just 1%. Sold price, rents are coming down a little bit. Not harsh, but they're coming down a couple percent. The median is also down about 2.5%. And days on market is still up. So you can see 48 days on the market on average, single family homes taking about a month and a half to get a tenant. Duplexes down here, we're seeing a higher volume. And I've talked to a couple of property management companies. What they're telling me is this is the season when you see a lot of the University of Texas leasing take place. And so what happens is you're going to see kind of a spike in listings there, especially in duplexes, call it in the central core around University of Texas. So leasing is up a little bit, but the number of listings, this is where we're seeing that spike, is up 40%. We have about 303 duplex listings on the market. Sold price, it's pretty even with last year. Median is down about 2.6%. So again, seeing some rental softening, and 53 days, that's almost 2 months to get a tenant. So again, slower season, taking a little longer to get tenants in the door. All right, let's talk about mortgage rates. These really have not moved very much. We had the Fed announcement back in September. We had the election, and really rates kind of shot up from the low sixes up to about 7%. They've stayed there. So right now, until there's a new catalyst that's going to create, more interest in the bond market, I think we're going to see higher rates. This is something to think about when you think about rates too. So if you had $100 and you want to go invest those dollars, you're going to go put it in the stock market. Well, the stock market's been pretty healthy this year. So a lot of people have moved their money over there versus coming over here and investing in the bond market. Typically, the bond market picks up when people are more nervous about the other categories of things you can invest in, like the stock market, like real estate, like Bitcoin, everything else. So they want to come back to safety. That's when I think we'll see the bond market soften some, but that usually means there's some bad news in the economy. So keep an eye on that. Right now, if you're a primary home buyer, I expect we're going to be buying probably in the high sixes. And if we can score some closing cost credits from the seller, we may be able to buy that down maybe to the mid sixes or low sixes, or even do a 2-1 buy down. If you're an investor right now, you're probably going to have a 7 on the front. So just be prepared for that as we look at mortgage rates, at least I'd say until December. And then let's see what happens then. All right, this is current on the market. This is number of active versus sold listings. The green is the active listings. And like we've talked about, we're in that late cycle of the year where we're seeing the listings drop off. Yet, we're still sitting at about 11,800 single family homes on the market right now. So still a healthy supply, especially if you're a buyer out there looking. We saw a little spike in closings in October over September. So we had about 2,300 sell in September. We had about 2,400 sell in October. And again, we had this drop in interest rates. And that's kind of prime fall shopping window. You got a little spike in buyers, not enough to feel really that noticeable, but it was nice to see that. It also stabilized kind of our median home price. But I think now, as we go into November, maybe we'll see one more spike because the buyers writing contracts right now are the ones that will be able to close before the end of the year. Within about 10 days, by the time we get to Thanksgiving, if you have not written an offer and gone under contract, unless you're a cash buyer, odds are you're not closing until January. So we're the last 2024 buyers are buying right now. This is historic sales price trend. So we're looking at 5 years here. So we're going all the way back to January 2019. And you can see what 2019 looked like, a little bit of appreciation. It was a healthy market. The fall every year always comes down a little bit just because less buyer activity. But we kind of started 2020 right around 300,000 a median home price. And then bam, rocketed up during the pandemic. Bam, came right back down after interest rates went up. But if we look at the low points of the last 3 years, so we're going to go to 2022, we're looking at about 440 after the big, let's say, fall from the peak of 2022. We got down to 440. Last year, we got down to 439. And this year, we're sitting about 429. So after all this volatility, all this slowdown, all these high interest rates, all this inventory, we're starting to settle, call it in the 425 range in the market. Even with these high rates, you can see after all these 2.5 years, once we got rid of the pandemic bubble, we've started to kind of balance out around median home price 425. It doesn't mean there's not pain in the market. It doesn't mean it's not hard to sell a house. It just means that what's happening is the sellers are getting more and more realistic with list pricing. The buyers are starting to realize, hey, this is the kind of acceptable value of the market. It doesn't mean prices won't still continue to soften, I think, probably through January, but I don't expect it's going to look like this big drop off that we had right after rates went up it's going to look a little softer each and every year, a typical fall. And then we'll see a little bounce as we get to, let's say, February. I think that's where we'll see kind of one of these spring up cycles start to begin. So, anyways, if you're a seller right now in the market, I think price is very important. Watch how many showings you're getting. I'll tell most of my sellers, we're looking to get 15 to 20 showings or inquiries if it's land to before we can get an offer. And so if we're getting really anemic activity, it tells us that we may be off on price, or simply we have a lot of competition in the market. If you're a buyer right now, I think you kind of know what your rate's going to be. So this is your opportunity, I'd say, between now and early January to get ahead of the spring buyers. So if you want to buy a property before we have our next kind of bounce in price, I think the time to do that is right now. Anyways, hope this information was helpful. If you want to check out our YouTube channel, make sure to go check out @RyanKellyGroup on YouTube. Click that subscribe button. We'd love to have you follow us each and every week. And of course, if you know somebody looking to buy, sell, or invest in the Austin area, hey, now's a great time to chat with us. We have a little bit of a rainy day today, but I expect it's going to clear out this week and end up being another awesome fall. So I hope you enjoyed this video. Go eat at one of those fancy restaurants, and we'll talk to you next week. Thanks.